Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Glenn Saldanha joins in now to talk about that. Glenn, hi, good morning. I wanted to first start by asking you about the US business, because at the conference call you mentioned that it is challenging. For the full year of FY18, your US business has fallen by almost about 13.5%. When you say challenging, do you think that FY19 could be as bad as FY18, or could it be worse?
Well, I think, if you look at the US business, right, we had Zetia, which is kind of skewing the numbers, so for the same period last year. So I think overall, while the US business continues to remain challenging, the positive thing for us is, we got a couple of approvals in this quarter, Wellcall being among the first generics there, along with 2 other players, and tacrolimus. So I think Q4 was basically the trough for the US business, and I think from Q1 onwards you should see the US business do much better than what we saw last year.
Good morning, Glenn. If you can give us a little more color. You also told us in the conference call that you have filed 7 abbreviated new drug applications in the US this quarter. So approx what kind of a volume growth, and how much of a price, the price erosion you said I think was about 10 to 12% in the US this year. After factoring in that price erosion, a similar price erosion, you will still be able to make more money in the US in FY19?
Well, clearly, if we continue getting approvals, right, we will be much better in FY19 than we were in FY18. Purely, if you see, Q1 was a big positive because we got these 2 big approvals, and that itself will, for the quarter will overshadow the price decline that we will see. So I think going forward, as long as we keep getting the approvals, right, I think the US business will continue to perform better than what it did in FY18.
Ekta?
Okay. Glenn, hi. Thanks very much for joining in. In the conference call, you did not provide any sort of margin guidance, though you did provide a top-line guidance for FY19. But give us a sense in terms of at least where margins would head, incorporating maybe growth in other markets ex of US, as well as the pricing pressure that you are facing in the US.
Well, clearly, on the margin front, Ekta, everyone is facing pressure in the US, right? And it's very hard to predict what the US margins are going to look like going forward. But I think so far we've done a very good job in maintaining our margins and managing our margins. So, I think on a full year basis, the margins will continue to look reasonably good, but we are not providing any specific number.
Okay. You spoke about out-licensing deals in your con call. Can you give us a little more color? What drugs, when, and what is an approximate amount one can look at as a business income from there?
Well, out-licensing still, we have several molecules currently under development, which could get out-licensed during the course of the year. So it still remains a main fort for our drug development strategy going forward. In terms of specifics, we have 1302, 1342, GBR 830, all these products, right, where we have active discussions ongoing for out-licensing.
Okay. Just coming back to that earlier point my colleague was trying to get at about the margin pressure. Has the pricing pressure been worse than what it was over the last 1 year? Are you expecting things to worsen? Because, a lot of companies have now stopped giving sort of margin guidance because of the situation in the US. Has the pricing pressure worsened?
Well, we think it remains pretty much at the same level in terms of the margin pressure. We don't think it has worsened, but it's not improving, and we don't see it improving over the next 4 quarters.
Okay. Glenn, what happens to the debt levels then, considering that you might even incorporate an out-licensing deal?
So I think on the core business, right, we will generate free cash in FY19, clearly, which will go to bringing down the debt. In addition, we have some corporate actions underway which we think will further accelerate the reduction of the debt. And then, of course, out-licensing will be whatever cash flow we get from out-licensing again will go towards lowering the debt.
India is about 0.25% of your revenues. Is that market set to do better than it did? It was a reasonable strong point in FY18.
Well, our India business has always continued to remain strong. So we continue to be among the three fastest growing companies, among the top 15 companies in India. And, we still see, strong growth coming out of India, both on our domestic business as well as our consumer care business. So I think overall India will be a strong driver of the growth in the year to come.
Okay. Do you have any visibility, Glenn, in terms of the 5 observations that you've received for your Pithampur facility? What kind of observations are they, and how do you think remediation would pan out?
So I can't comment on the observations we've received, but all I can say is, we got an approval during the course of the inspection, so which is well called, right, from the same facility. So that's a positive.
Okay, just one final question then. I think over the last 5-6 years, you have been consistently increasing your R&D spends to grow your business. But this time I noticed that you've planned to reduce it to 12% of sales versus an average of around 14%. Are you doing this as a conscious effort because challenges mount for the business, a reduction in R&D spends?
So I think the 14% was only in the fourth quarter, but last year on a full year basis, we were in the 12.5%, somewhere thereabouts. Okay. So this year we're guiding to 12%. So I think overall, R&D spends, we will keep at around the 12% number and keep it pretty flat on a full year basis.
All right. Okay. Thank you very much, Glenn Saldanha, for joining us and giving us more color.